when do you think you'll feel like you're at a point where it's completely built out in California, you've figured out all the reg stuff, and basically it's just plug and play when a new customer comes online?
I think we're basically there. Really what we're focused on in California for the next 6 months to kind of round it out and complete the infrastructure is a couple of opportunistic markets that will infill. We have, retail in certain markets. We're trying to cover a couple others. There's secondary markets that would make sense to have a presence, whether that's on the delivery side, on the brick and mortar, or even just a mini DC to help support the distribution center. When you think about this infrastructurally, it's a logistics business. It's like running an airline, right? The more hubs you have, as long as you acquire and integrate them efficiently, the more efficient the operation is going to be on a long haul, steady state basis. So I would say probably about another 6 months, 3 to 4 transactions. We feel very good about kind of how robust the infrastructure and services suite will be in California. And then from there, it is the neighboring states that we've already established a footprint in.
And it should be easier because California is the most complex and crazy.
That's absolutely right. I mean, everybody talks about it being the biggest market in the world. That's the red herring, right? It's actually the most commercially dysfunctional and the most fragmented. You have 480 municipalities, 70 counties. They all have differing legislation. So a logistics business trying to create a systemic solution and rationalize the supply chain all the way into the living room of the end consumer, this is the crucible to stress test that model. And if you can make that work in California, then you export it and roll it out nationwide. So it's a little bit of counter-programming to the MSO strategy. I really don't see the value in a lot of that. It doesn't enhance efficiency. And if you added up, kind of the revenue opportunity in all of the legal states right now, you still don't even touch California. The battleground is here. We get it right there, then we move out.
Right. And I think a lot of the LPs who may have done some of this stuff in-house themselves are kind of realizing now I can't do everything myself, so I'm going to have to outsource, right? And so you're probably seeing that where customers are just going like, oh, well, you do it faster, cheaper. So
yeah, I mean, there really hasn't been a universalized, fully, kind of covered infrastructure, certainly not in California. And so from that perspective, if there's no water, people will drink the sand. So they've relied on self-distribution. They've gone to the gray market. That is exactly the problem that we want to solve. But we want to solve that all the way through to the end user of the product. That's the idea.
And you see there's a whole pipeline of private companies doing acquisitions. Talk to us. How many acquisitions have you done? And what does your pipeline look like going forward?
So we're actually not looking to buy revenue, which is what a lot of people are doing with their acquisitions. We're buying foundational businesses. We have 4 right now, which kind of helps us with our ramp, as I mentioned earlier. 2 of those are fully executed. 2 of them are fully funded. We have them locked in. We're kind of timing closing of them to accommodate the listing process. So there's a strategy there. But in terms of, the kind of theory about how we grow the business, I don't want to rely on rolling things up. The idea is we buy a foundational business like our first delivery acquisition. We bought that in San Diego. We already had licenses in Oakland and Brisbane and other markets. So it's a plug and play strategy. We sweat the asset we bought immediately after we buy it. We show the market we can generate revenue, not just buy it.
Yeah, no, I think that's an important point. There's a really interesting company listed here on the Toronto Stock Exchange called Descartes Systems. They do logistics, air freight, transportation in all sector categories, but they've grown through acquisition and they've been around for like 15 years. It's been one of the best performing stocks, actually. I really think people should look to that one as kind of a comp. I'm sure they're not in cannabis yet, but all their acquisitions have been bottom line focused. Right. And I think that's what you're saying, because some people might go, oh my God, they're just buying top line, but you're really at the end of the day. I mean, you're a P&L guy, I can tell, because your Harvard background and everything.
Don't hold that against me, please. No, it's absolutely right. I mean, I think that, our view of this is much longer term than the average operator. We're in this on a 3 to 5 minimum time horizon. We see the ability to scale and build and position now for what can be a truly investment grade enterprise. And it's not often that, a market is invented out of thin air for you to use as basically a mound of wet clay and shape into something really special. And that's exactly the opportunity we see here.
That's a really important point because so I work with a lot of fintech companies and they're trying to displace 100-year-old banking system where you have entrenched people and entrenched technology. You don't have that in cannabis, so you can actually mold it the way that you want to mold it.
Yeah, that's right. It's very plastic right now. People ask me what I do for a living, and I tell them that basically I'm in the business of problem solving, right? I mean, if you look at California, it is a giant Rubik's Cube, right, and a very valuable one. And so that's the code we've been trying to crack for the last 2 years, and I think we've really done it with something that's truly differentiated. No one is thinking about it in this way.
That's awesome. Let's talk about capital. So you just closed a $20 million private financing. You've also financed off balance sheet with a family office. When you sit in front of the professional money managers now and show them exactly what you've done with the acquisitions and the revenue ramp, like, do they kind of go, okay, you've proven yourself out, we will now give you larger sums of capital? Like, how is that conversation evolving?
Yeah, actually, it's interesting. About probably 25 to 30%, maybe a little bit more of our last round was all existing investors that stepped up to support the company. So I think everybody's really happy with that.
Right.
So yeah.
And like bigger money managers who haven't participated now see the potential and are kind of going like, maybe you guys should do.
Yeah, we got a couple of those into the last round, you know, that are, look, the United States, there really is no sandhill road to go to raise money for cannabis yet, right? Mm-hmm. So you have all of the kind of regulatory and cultural restrictions that, keep you out of banking, that keep you off the major exchanges. Mm-hmm. So all that is a challenge because there's no centralized repository of capital to go to from an institutional perspective. But we're starting to see that happen. And really, actually, what we found is in a lot of cases, we've approached those types of firms. And while they by mandate can't invest, a lot of the principals will because they see the value in the story. And so we have a number of those individuals on our cap table.
Okay, 2 more questions. What's the biggest risk to the story, and what are you most excited about in the next 6 months?
The biggest risk, I think, actually is somewhat counterintuitive. Everybody is kind of looking into the crystal ball around when the federal government is going to reschedule this, and most people think that operators are in a hurry for that to happen. The truth of the matter is, and again, this is just being good at a Rubik's Cube, and right now this environment says play with the Rubik's Cube, right? It's difficult, it's challenging, it keeps competitors out, and frankly, I really don't want the federal government to do this too quickly. It gives us runway and time to build the kind of enterprise that will be of scale enough and position enough that when, kind of the outside big industries come in, pharma, logistics, alcohol, whatever, there really is something of scale value to sell to them.
Yeah.
And so it's funny, most people think it's about enforcement. We are 100% compliant in everything we do. We've done that from day one. We didn't even turn on cannabis revenue until we were fully licensed everywhere, and all of our counterparties and clients too. So from that perspective, it's not enforcement. It's actually that this gets rescheduled too quickly as a risk.
Right. And these big guys will want something that has scale, like you said, to take a bite size.
Well, right now, I'm not competing with Amazon, right? If they lift the federal restrictions, Amazon's going to get into this business, or somebody will.
You need 18 months. You need to do some massive acquisitions.
Yeah, I want to have flags in the ground, from coast to coast, in the next 18 months. That's the strategy for sure.
All right, and then what are you most excited about? Parting words, last words.
I'm excited about Canada. I love it here. And I'm very excited about the listing. It's interesting. I've been an investment banker for 20 years, and when you talk about an exit event like this or a liquidity event like this, your first thought is your shareholders, obviously. That's who you are always in the service of. But for me, as the CEO of the company, this is really where the life cycle starts, is this launch.
Right. All right, ManifestSeven, look for it on the CSC, coming to the CSC very shortly. So thank you so much, Sturgis.
Good to be here. Thanks.
Next up in the studio, we have Julius Kalsevich. He is the CFO of iAnthus Capital, one of the first publicly traded cannabis MSOs in history. We're so happy to have you here. So welcome, Julius.
Thank you, Jen.
Going to walk us through the presentation, and then we're going to do some Q&A.
Fantastic. Let's see. Okay, so once again, I'm Julius Kalsevich, CFO of iAnthus Capital Holdings. 2 pages of disclaimer and safe harbor. First off, who is iAnthus? iAnthus is a multi-state operator. We're in the U.S. sector, so we have licensed operations in 11 states right now. And when I mean licensed operations, we're vertically integrated, so that is the fact that we grow our own biomass. We then process it into our own products, and then we have our own retail dispensaries, then we sell it through. We've been a public company for a little over 2.5 years, so there's been a lot of people sort of following us or know of us, but I always find it helpful to level set as to where we are right now, because we've dramatically changed over the past couple years. So first off, in terms of our run rate revenue based on our Q1 results, $74 million of revenue. Based on our April numbers, that number is over $100 million at this point. We have 22 open dispensaries out of a total of 68 licenses. We have a series of brands that are asked for by name by our customers across the U.S. We also sell through 110 licensed dispensaries in some of the states that we're in. We have a CBD product line that's available in 1,000 different doors. We have over 1,000 products that we're selling through our dispensaries, over 500 employees, and lastly, over 60,000 shareholders. Just in terms of the actual map, so I think it's always helpful for people to see where we actually are. We're active in 14 states right now. The dark blue ones are where we have licensed operations, and all the light blue ones are where we have CBD distribution. Just in 2019 alone, these markets that are shaded in, or these states that are shaded in, that's a $12 billion market in 2019, which gives us tons of room for us to continue to penetrate and grow our market share. Over the past couple of years, we've been as active, if not more active, than anyone in terms of expanding our footprint. Back in January and February of last year, we acquired licenses in Florida and New York that we're building out now. We also had license wins in New Jersey and Nevada. We completed our transformational acquisition of MPX back in February. That brought us into Arizona, Maryland, Massachusetts, California. And lastly, we're in the final stages of closing our CBD acquisition, CBD for life. I want to make it clear that we're not just solely a bricks and mortar retailer. We're just not planning to sell our products through our own bricks and mortar. That's a component of our strategy. We have 22 stores open right now, and we're going to continue to open more throughout the remainder of this year, especially in states like Florida. But we're also selling wholesale. We're selling our branded products into other multi-state operators or competitive. We're in over 110 doors right now. We also have mass retail distribution on the CBD side in over 1,000 doors. Urban Outfitters is one of our marquee clients. And then lastly, online, whether through our CBD for Life site or any of our other CBD clients where they're selling it online. Given the fact that we've been acquisitive over the past couple of years, some of these companies that we've acquired have had different names or different brands, and we wanted to harmonize them all under one name. And at iAnthus, we've held the long-held belief that cannabis can be a basis for a health and wellness regime, whether it's pain management, medical conditions, creativity, or just very simply being the best version of yourself. And that was the genesis for the name B. That's going to be our retail dispensary name. We also believe in a market where a lot of people have named themselves some version of leaf or grass or green. We think that this is something that's very distinctive and differentiated out there. So we have 22 open stores. They will all be renamed under that name B, but you'll also continue to see that we're developing flagship retail locations in such cities like Atlantic City, Miami, Staten Island, Las Vegas, Orlando. So you're going to see B popping up in all of those various states as well. I also mentioned that wholesale distribution, getting our brand out there and distributing our brand in states that we're in is absolutely critical to being a brand builder and building a national brand. For instance, just in 4 states where we're quite active on the wholesale side, in Arizona, and all of these markets in some cases are starting to approach billion-dollar markets within the industry. In Arizona, we've penetrated over 20% of dispensary shelves. In Nevada, open dispensaries. I believe there's about 100 open in Nevada. We're on 40 competitor shelves within Nevada. In Massachusetts, it's 30%. And then in Maryland, where they're really hitting it out of the park, I believe there's about 71 or 72 dispensaries that are open, and we're on 51 or 52 of the competitor shelves with our products there. And one of our flagship products is our MPX brand, Melting Point Extracts. This is a product that's asked for by name. It's totally differentiated, and it's priced in a differentiated way. In a lot of cases, because of its quality, it's actually priced well above other competitors or commoditized products out there. And it's also won a slew of awards. And this is going to be a cornerstone of our various product lines as we continue to move into other states and continue to build brands. On the CBD side, we use the CBD for Life brand. This is an acquisition that we announced at the end of March, and we are going to be closing imminently. Right now, it's distributed in over 1,000 stores. It's had some fantastic press, whether it's Cosmopolitan, Elle. It's been featured on Good Morning America a few times. There's also a series. We have sort of a base sort of mass market product line that we're using, and we're continuing to extend into other various product segments as well that you'll continue to see later this summer. That's going to grow the customer base out there. Talking about brands, talking about products is all very nice, but you can't do it unless you have the footprint or you have the infrastructure to do it. We've continued to invest in our footprint. We have over 400,000 square feet of active cultivation and processing square footage across the U.S., 33 acres with over 200,000 square feet in Florida, and other footprints, whether it's Nevada, Massachusetts, building out one in New York. These are all critical in order to provide the products and brands that you're going to be selling through your network. And the reason that it's so important for us to invest in that infrastructure is because we see what's coming. Just looking forward in 2020, 3 states that are out there, New York, New Jersey, Arizona. These have all been states that have been tinkering over the past couple of years with full legalization. You add that up, that's almost 40 million people, and that's $5 billion of an addressable market opportunity. And we have one of the limited licenses in each one of these states. The case in New York, there's only 10 licenses that are there. In New Jersey, there's 12. That just gives you the potential for a $5 billion addressable market opportunity, how large the potential market opportunity is for a company like iAnthus, where there are a limited number of competitors. So in a nutshell, when I look at our actual strategy, it's relatively straightforward and what we're trying to make sure that we're always focused on. So step one is we're building a broad retail footprint. You see that in the stores that we have. We have 22 that are open right now. We're pushing our way towards the end of the year, upwards of 50 stores that we'll have open. Next is every single person who comes into our store, we're making sure we're delighting that patient or the retail customer and creating repeat customers and great word of mouth with our products in our dispensaries. Step 3 is creating products and brands that customers have, that are brands that are asked for by name. Step 4, making sure that those products are distributed on other people's shelves and through other channels. As I mentioned, we're already on 110 other competitor shelves out there. And then lastly, making sure that you have scalable operations and infrastructure to continue to support this network. So iAnthus is a multi-state operator. We're not the only one that's out there. We definitely have some peers, and I believe we compare incredibly favorably in terms of footprint. So if you just look down the screen in terms of footprint, number of states, how many dispensary licenses, how many cultivation licenses, our revenue, we're sort of just shy of some of our larger competitors. But I think the one area where there's a significant mismatch is on the valuation side. We trade at a significant discount to our peers, and I think that this, on top of all of our other sort of competitive advantages, makes us something very attractive right now in the market. And then just lastly in the appendix, for anyone who wants to flip through, you'll see our recent Q1 numbers. We posted $18.5 million of revenue for the quarter. We have about 245 million shares on a fully diluted share count, and some other details out there in the appendix. Thanks.
Fantastic. All right, we'll turn it over to some questions now. And because this is an investor-first conference, people are wondering, so there are a lot of MSOs out there, and there's been a lot that have gone public. And what if somebody's looking at all of these companies, and apart from the valuation discrepancy that you just described, what would you tell them in terms of like why buy a share in iAnthus versus some of these other MSOs?
Sure. And I think that in a lot of cases, you want to really understand what is the platform that everyone is bringing in each of those states. And you can't be a one-trick pony in any state. And I look at, for instance, we have licenses in 11 states right now, of which 5 of them we have really great infrastructure that is sort of firing on all cylinders. Some of the other ones are a little bit more nascent or greenfield. But I think it's important when you start tearing apart other people's numbers, you look to see, hey, is the majority of all of their revenue coming from 1 or 2 states? I think if you look in the case of iAnthus, we have real platforms and we have real momentum in 5 states. To be able to do it in 1 state is great. Hopefully you can replicate it in others, but you want to look for people who are actually doing it in multiple states, because that gives you the track record that you're able to do that. And I think one other thing that's really critical is that you have to look at, and I mentioned this in the presentation, it's nice if you have your own stores that you're selling through, but if you look through a lot of the other multi-state operators, you will see our MPX brands and MPX products on the shelves of a ton of our peers. I haven't necessarily done a comparison with every single one of our peers, but I believe in terms of the awards we've won, the different competitor shelves that we're on, we're one of the leaders out there. So I think it also tees up the fact that we know what consumers want, we know what other competitors want, and we're not just selling through our own network, we're selling through other people's networks. And creating that big brand and that brand network, I think that's going to be critical.
Yeah, I think that's a really good point, because we had heard from analysts and investors that there's a lot of competitive forces at work, and sometimes you can't really get your product on other people's shelves because they're trying to hold you back or whatever. So I think it speaks volumes that you're able to pull that off.
I would have made, not to interrupt for 1 second, but I would just make the point, and this is a plug for another great public company out there, Planet 13. And if you look, obviously that's one of the biggest superstores out there in Nevada. And if you go look just on their website, you will see MPX products out there. And if you kind of sort of scroll through of other MSOs or their products there, they're pretty hard to find. It's like you do see MPX products that sort of focus on one of the biggest retailers out there. I think that's a testament to the fact it's differentiated. And at a store like that where there's a ton of selection, they want our products on the shelves.
Yeah, and actually Nicole and I were at the Planet 13 Superstore opening in Vegas. I think that was back in October and November. So, and we've also been in a bunch of iAnthus dispensaries. You hosted a Florida dispensary tour, and it was, it was the nicest dispensary that we'd been in. And talk about delighting your customers. I think that's like number one. So from a customer standpoint, if we turn to them, if they're looking at 2 dispensaries, like why go in yours versus another?
Yeah, and I think there has to be a variety of different things. I think number one, you have to have great locations, right? You want to be something that is either visible or highly trafficked. I think that's something that's key. People like accessibility. You want to be able that it's somewhere that it's easy to get to, especially in increasingly competitive markets. I think that's number one. I think you also look at who is the customer who's coming in, and there is no single cannabis customer, cannabis patient. It's a huge spectrum of potential patients or customers, and you want to make sure that it's inviting to a wide variety of people. I think that's something else that's key. And then lastly is making sure that when you come in there that there's a variety of different products on the shelves. And the last thing that is absolutely key, it's the customer service element, that you are working with whoever that patient is or customer and guiding them through the process. Because a lot of people, when they do walk in the first time, they see it as perhaps a novelty or it's word of mouth and they're trying to figure it out. And if you can have that customer service experience, I think that's something that's really critical.
We talk a lot about the flower versus oil market in Canada, especially given the legislation changes and policies happening in the fall where edibles and vapes will be allowed. So in the U.S., how have you seen this evolve? Because I know in Colorado, it started out with flower and now it's oil. How do you see that? Because you have, a multi-state view on this.
Yeah, so you look in, for instance, very mature markets. And for instance, Colorado, at this point, or even a year ago, it was kind of 50-50, 50% flower and then 50% sort of non-flower products. And you see that even moving a little bit more to 40-60, where it's 60% non-flower products. And I think that's the way that the industry is going to continue to go. And I think it's going to continue to go in that way because there's competitors and companies like us and some of our peers that are innovating and developing new products. So if you look in what was the easiest thing for someone to produce as a product? Flower. You just grow it, you snip it, you cut it, you sell it that way. But when you're bringing some technology and innovation into it, you can start developing some really cool products. And that's what MPX has done, and that's why we think it's a real differentiator. So my view is you're going to continue to see it more and more head in that direction. And never mind when you start looking a little bit out in terms of some beverages and some of the apps that can come out on that side. I think those are going to be the ones that are really revolutionary. But those take some real skill and technology in order to mass produce some of those.
We've had some conversations with analysts around the M&A cycle with the MSOs, and I think one of the difficulties, and maybe you can enlighten me on this, is the fact that there are so many different rules in different states. And so trying to combine these MSOs together can end up being a big puzzle, and assets need to be sold off and that kind of thing. Is that what you're seeing?
Yeah, I think that it's there has been a land grab, and everyone has wanted to make sure that they get into those must-have states. And those are pretty easy to figure out what are the must-have ones. You look at places like Massachusetts, which is viewed as sort of the Colorado of the East. It's going to be a huge, huge market for everyone. You look at New York and Florida. Well, in any one of those states, it is more or less almost impossible to own multiple licenses. But all the MSOs already have a license in those states. So that if you do look at some combination between any of these bigger players, there's going to be a tremendous amount of breakage or leakage if you ever need to sort of put some of these companies together. But where I think there is going to be continued M&A depth is you're going to sort of build out some of the platform. There's some other key states we want, other people want. There'll be some horse trading around that. And then lastly, I think it's on the brand side. Having a footprint is great. Sort of the comparison is when you look at some like wireless spectrum or wireless networks, and it's great having the ability to have customers in all these places, but unless you kind of actually have brands
and
or
scale,
product and scale and stuff like that. Just saying that you have a license in that state, you got to be able to do something with it. And brands and products are what's really critical to do that.
Yeah, and you got the CBD for life in the Urban Outfitters, so that's giving you like a leg hold in all those stores. So
Totally.
Probably introduce other products too.
Exactly.
Quickly here, let's just talk about earnings. So we've had this earnings season here and kind of a kumbaya. People realizing that it's not just a top line sector. Eventually, people deliver the numbers. So, how are you guys talking about this internally at the management level?
Yeah, so top line I think is critical. It's also critical when you look sort of state by state how you're growing it. But then lastly, I think people want to see expense controls, and that is something that we talked about. I spent a lot of time on our last earnings call. We just acquired a company, MPX, which more than doubled our size, and I really tried to walk through corporate expenses and selling expenses and a variety of labor expenses to show even though our company's more than doubled in size, some of these expenses have only went up by 60% or 40% or 80%, trying to show how you're getting the synergies of a lot of this, because ultimately there is going to be a lot of revenue in these states, but you have to be able to manage. You have to manage your costs in a lot of ways, because it is expensive being in different states where everything is relatively different, and you got to manage one by one and sort of keep legal and accounting and some of that stuff boxed in.
Well, you're the CFO, so we'll hold you accountable.
Okay.
But anyways, we've got to go. Julius, thank you so much for joining us. iAnthus, check it out, IAN on the CSC.
Thanks, Jen.
Thanks. All right, now we're going to jump to Isracann. Daryl Jones, he is the CEO and president. He is joining us from the UK. Welcome, Daryl.
Hi, how are you, Jen? Thanks for having me.
Fantastic. Oh, we see you there. All right. So we're going to have you present for 10 minutes, and then we're going to do some Q&A. So I'll let you take it away.
Wonderful. Well, thanks for the opportunity. And coming to you live from London here at the Cannabis Europa. As you mentioned, Daryl Jones, President and CEO of Isracann. And I have the deck in front of me here. I'm just going to work through it. I'm going to start on page 3. and get into exactly what we are. And Isracann is Israel's first pure play cannabis firm to go public in Canada. We're focused on becoming an ultra low cost producer in Israel, which in our view is a phenomenal place to operate. Some of the lowest operating per gram costs in the world. And we've been working there for about a year, establishing ourselves and understanding the market. And the main driver was our experience in Canada. We've seen the movie play out in Canada, and we're a big part of financing the creation of these unicorn companies. And we just discovered Israel as a replica to Canada. So call it Canada 3 or 4 years ago, and we're currently there on the precipice of building out the 230,000 square foot facility, which we're fully funded for. The opportunity there is massive. Initially, in the country alone, there is a patient wait list of well over 10,000 patients. Currently, 40,000 people accessing medical cannabis, and we see that number growing substantially. So the undersupplied domestic market is a near-term opportunity for us to take advantage of, and obviously expansion into major European marketplaces is now becoming a very big reality with an export bill that's expected to go live early next year. Just speaking briefly here on page 4 on the climate conditions in Israel, you've got ideal humidity, optimal temperature, over 300 days a year of sun, which lead to ultra low cost production, multiple growing cycles, and an agricultural society. Israel is well versed in agri-tech, and we fully expect to take advantage of that. Page 5, investment highlights. Part of the facility itself is going to be built from the ground up. It's going to be a IMC GAP, GSP, and EU GMP certified for access to all the major markets, which is crucial. As I mentioned, there's a 230,000 square foot footprint. Roughly production numbers look at about 23,000 kilos annually. And we'll begin phase 1, which is 115,000 square feet in the next, as we go public here in the next month to 2 months. As you can see, we have the ability to expand to quite a large footprint, over 500,000 square feet, and we expect to have flowers being harvested late this year, early 2020, and we will work to expand on the footprint as we move forward. The engineering, we've already completed the architectural designs. We're just in the characterization phase. We've got some of the top architects and engineers in Israel who've worked on multiple farms and executed some of the highest quality builds there. So we're well on our way on that side. And in Israel, and near Israel is the location of the farm. So the next slide highlights the location. It's an agricultural area, very well versed in leading technologies that allow for low cost production. And you can see there the optimal climate and infrastructure are pushing us near a 40 cent per gram Canadian cost of cannabis. So this is a massive driver for us. We firmly believe that low cost production of high quality cannabis will win the day. And it's from that production, accessing the research that Israel has currently is one of our top priorities. We've begun working with some of the top institutions there to begin pushing forward some novel products and expect to announce more of the partnerships as we push forward to public markets. Slide 7 speaks about the cannabis market. I won't go into detail about it. Obviously, growing rapidly. Europe is expecting to come online with anywhere from 90,000 patients to 900,000 patients over the next 3 to 5 years. You've obviously got the domestic market, which I touched on, the 10,000 patients that are currently waiting to get medicine or medical cannabis. And then obviously the international marketplace, which Israel has approved the export framework, which is exceptionally significant. It's a massive opportunity for the country. And we expect that to be online mid 2020. Getting into the business model in Israel, we have obviously the cultivation, the construction of the 230,000 square feet will begin in the next 2 months. We're fully funded for that. I'll get into the financing shortly after this. Distribution, obviously, distribution within the country is crucial. We've got relationships there in country to be able to access the underserved marketplace. We've also got an LOI in place for access to the EU, which we'll be able to elaborate on more as we push forward and get into the details of that. And then obviously branding products. Israel's got a unique advantage being a cannabis hub for the last 50 years. We feel there is a compelling opportunity to bring Israeli products to the world and starting in the EU. Briefly touch on the regulatory overview. What you've got is you've got a 6 license regime, very similar to Canada. Nursery and cultivation. Nursery and cultivation licenses lead into manufacturing, where your high margin products, your distillation oils are created. It flows down into the distribution license. From that, the pharmacy model is where the patients will ultimately access the medicine. As I mentioned, the Israeli export law approved January of this year. We feel very confident that this will open the doors for Israel to be a premier supplier of high quality cannabis at obviously very competitive prices. Touching briefly on the market, I've gone over majority of the Israeli market domestically there, and this is going to be a massive opportunity for us to begin building the brand. And then obviously we move into the European market on 11, 740 million people, one of the biggest patient populations currently in the world, and countries are falling in line. Just at this conference today, we've heard multiple opinions that the EU is still very new, but the opportunities here are abound. So we fully expect to be accessing that market as we move forward. And slide 12, we have the facility. You've got a rendering there on the bottom left side. So our architecture, YAMCO, it's been completed. Obviously to IMC GAP and GSP standards. Security consultants, we're well on our way to begin construction and have this completed before the end of the year. And I think I mentioned this before, building a facility from the ground up, GAP, GSP certified is crucial to accessing the high quality marketplaces. And really have the team on the next slide, slide 13, myself, obviously president and CEO. We have a team in Israel, Mark Zagel and Israel Moseson. So Mark is a serial entrepreneur businessman in the country. He's taken multiple deals out of Israel, raised tens of millions of dollars for them, and listed them in North America, mainly in the US on the NASDAQ. So obviously very happy to have Mark on board, and Israel Moseson as our our on-ground operations manager. Israel has put himself in the middle of the cannabis business there for the last 4 years. He's very experienced on the ground dealing with the Israeli suppliers and everything we need. And we've insulated the balance of the team with a phenomenal advisory board today. Nitin Kaushal, a director of PwC, corporate finance, has advised on multiple transactions that would reach into the billions. Obviously, very, very excited to have Nitin on board as we move forward and look to consolidate our business plan. Matthew Christopherson is an advisory board member, co-founder of Hierarchy Cannabis, a dispensary and quality branding chain in Canada. Has visited 2,000 cannabis cultivation facilities, so just a deep knowledge of cannabis companies as it stands today. The rest of the team on there, Brett Allen was a founding member of T-God, the Green Organic Dutchman, Emblem, and Organigram. So just a deep knowledge of the cannabis space and capital market space for that matter. And then the final two, Deepak Anand and Vivian Berkovici. Deepak was one of the top producers at Cannabis Compliance, a global leader in cannabis consulting. He's also a director of the Canadian National Medical Marijuana Association and speaks all around the world on cannabis and access to it. So very happy to have him involved. And Ms. Vivian Berkovici former ambassador to Israel from Canada, has pushed us forward and helped us navigate the Israeli markets and the political landscape to push forward, our plan of exporting cannabis to the EU and international marketplaces. So that wraps up the team and everything. We just took in $10 million at a $55 million valuation. Very significant financing, well over 800 subscribers on that private placement, which fully funds the company through the build out and into the next leg of the business plan. We'll be trading in July, late July. The dates are not set yet, but we're just in the process of getting a listing statement finalized. And the symbol is iPot. And once we get public, it'll be listed on the CSE. So very, very excited to bring this to you guys, and obviously happy that we are where we are in today's market.
Daryl, it's exciting times for Israeli cannabis companies. Since we hosted our tour in Tel Aviv last month, and Isracann was on it, and we had investors out there looking at the various operations, I received in my inbox term sheets for two massive Israeli companies that are planning to also go public. Breath of Life and IMC, and I think those are being financed by the big banks here in Canada. And so can you talk a little bit about their valuations compared to yours? Because I think they're talking multi-billion-dollar valuations on very little in revenue. So I think it's good for Isracann, if anything.
Yeah, no, we're very obviously very excited that other companies are seeing the value there. And IMC Cannabis is going out at $150 million valuation. They're looking to raise 25 to expand their operations. Relatively little revenue, but a strong candidate, and just speaks to the volume of what's available in Israel. And then Breath of Life is one of the larger manufacturing companies, and they're trying to command about I believe it's $1 billion market cap. So the path for us is set, and obviously we're racing to be public as fast as possible, because we believe this market is poised to be a leader in the space for the next 3 to 5 years minimum, if not the rest of the time in cannabis.
So you're going to start trading at the end of July, hopefully, fingers crossed. You've just raised a financing that you're fully funded for the next little while. What are some of the catalysts that investors will be looking out for over, say, the next 6 to 12 months that are value generating?
Yeah, great question. Obviously, we're building the portfolio. We're building our next leg up, and initially it's going to be the build out, execution of construction. Obviously, the final licensing as you go through the GAP and GSP, those are going to be very significant. Adding a few new team members along to complement what we already have, and looking to add some other pieces of the business plan that we believe are very complementary. We see a lot of opportunity out there, and we've reserved some of the capital to look to execute on some of these M&A opportunities that are presenting themselves.
Have any of the major cannabis companies set up shop in Israel yet?
Kronos is the only one right now. They've been operating there for a handful of years, sort of on hiatus until the government rectified the export market or the export law. But they're pressing forward on a build out in the north part of Israel, I believe. And outside of that, I haven't heard of anybody else making a splash as of yet. So we'll wait and see.
And let's talk about the domestic market in Israel, because I think, one of the differentiating facts, a lot of people talk about South America, but the markets down in South America haven't been as big consumers of cannabis as, say, Israel. So talk to us about the consumption patterns in the country.
It's quite interesting. Israel has some of the highest per capita use of medical cannabis in the world. There's 40,000 patients currently, which is a striking resemblance to Canada. When Canada started, there was, I think, 30,000 patients and 13 licensed producers. You currently have 40,000 patients and 8 producers in Israel, with a couple more coming online shortly. But everything we see is that number is expecting to grow very rapidly. We see that the marketplace in Israel becoming double what that is today, upwards of 100,000 patients, and consumption growing. They're slightly behind in terms of products as well. Right now, it's a lot of dried flower and some crude oil. But as that develops, we feel like it could be a Canada 2.0.
And how are the conversations going with the investors out in Europe? I mean, is the appetite how it was a couple of years here in Canada, where everyone's sort of chomping at the bit to get in these LPs? Is there an educational process going on? What are the general conversations like?
In London here, the consensus is that there's money that's ready to go into the cannabis marketplace. They're really quite a bit behind in terms of understanding and accessing some of the deal flow that we have the luxury of getting in Canada. But they are very excited about getting involved. The European markets are about to crack open, and we're hoping that the market's open here, because it'll just be an inflood of capital and a lot of new access to markets, capital, and products coming down the pipe.
Do you envision cross-listing on any exchanges outside of the CSC? Or sorry,
yeah,
you guys are going to be on the venture, right? Sorry, you're going to be on the venture, not the CSC.
No, we're going to be on the CSC.
Oh, you're going to be on the CSC, okay.
Yeah, so I was actually on a panel today speaking about path to public markets, and one of the gentlemen is Alex Brooks from Canaccord in the UK, and they are pushing aggressively to get cannabis companies listed in London. So we've begun speaking with parties like Canaccord to understand how to get access to the market here and what the requirements are. We'd be very interested to be a part of the market here in Europe and have a secondary listing if it makes sense.
And how early could that be, do you think?
Well, we get public in Canada first, but ultimately, we would want to coincidentally want to be a part of the market here if there's access to capital. Some of the deals we're looking at currently are centered in the UK and in the EU. So something that would be a natural fit would be making an acquisition and looking to list the shares here and have access to a new pool of money.
It's fantastic for Canaccord. I mean, they've been the kings here in North America, raising capital for U.S. MSOs. So it's smart for them to pivot in Europe, where there hasn't been as many checks written. So that's fantastic for Isracann. And thank you so much, Daryl. We are going to leave you now, but people can rewatch and replay this segment. And we are going to jump to a quick break before we bring on the president of Hemptown USA. So thanks, Daryl. And we now are going live with the president of Hemptown USA, Michael Townsend. He's coming from Vancouver. This is a very exciting new client of Greg Capital's. They are private right now with plans to go public and to be a leader in the hemp production in the US. So welcome, Michael.
Yeah, thanks, Kennedy, for having us. I'm here with the CEO, also John Cummings, and we're sitting in our office in Newport Beach, California. This company has all its operations based in the United States, and mind and management is in the United States, which is where I spend most of my time. So thanks for having us, and we're looking forward to get started.
So I'm assuming everyone here on the call can see the presentation, and that. So on that first slide of the presentation, should we do the video or that's the
Yeah, I don't know. Let's play the video, I guess.
Yeah. So whoever's controlling the presentation for the audience, on the second slide, there's a play button that says Hemptown USA story. Is that something that you guys can click and let the audience see kind of our teaser?
They actually can't see that, but we should just let people know they can go on the website afterwards and play the video because it's fantastic. It's probably one of the best videos I've ever seen in capital markets. So we'll just have to move in with the presentation.
Sure, not a problem. So if you're anyone that wants to go back, just Google Hemptown USA, where the magic happens. It's a 2-minute long teaser video. It actually has quite a bit of footage of our crop from last season, our operations and facility, and everything else. So I encourage you to do that. But moving on, we'll go to the investment highlights slide. Hemptown Organics was founded in December, right around December 21st, the day after the Farm Bill was signed here in the United States. We've put together a management team of cannabis, hemp growing, agricultural, and banking experts to create a management team that we knew we could really leverage the opportunity that was going to be coming into the marketplace and create a company that has that would be poised to be a market leader. So our first step was to purchase a farm in Oregon. It was Oregon Sol, an established operator. Bob Wilderman, the farmer, is now the chairman and founder of the company. He has farmed successfully just last season 50 acres, 110,000 pounds of biomass. That biomass will earn us between $7.5 and $8 million in revenue this year. But we were not vertically integrated. If it had been a vertically integrated company, then that harvest would have probably hit closer to $20 million in revenue. So it was a big priority for us moving forward. We wanted to vertically integrate the company and also create some scale. So pre-Farm Bill, we were a 50-acre operation in Lower Oregon, outside of the Medford area, harvesting 110,000 pounds of biomass. You can see it here in this graph, the first one on the left. We've expanded our operations now to over 1,500 acres. We have 500 acres in Oregon, 500 acres in Kentucky, 500 acres in Colorado. Our forecast harvest this year will be 3 million pounds of biomass. We've also vertically integrated the company, so we will be able to not just grow and harvest, but we'll be able to process into crudes, distillates, isolates, and formulations that will allow us to see those larger margins downstream. We can also place those products into our own product lines. We'll be proud to announce here in the next probably 36 hours that we're closing a transaction, which is the acquisition of Kirkman Nutraceuticals. It's a nutraceutical company with over 400 different SKUs, specializes in formulations for children with autism. We can immediately begin putting our products back to work in those product lines. We expect to see a lot of success. We've got a great distribution network through doctors and so on. So those are basically the kind of the highlights of the company's focuses at the moment. Our forecast revenue for 2020 on the low side, and for anyone that wants to walk through the model, we'll make ourselves available to explain how we get to this number, but it's set at about $204 million for next year, US dollars. This year we'll close right around $20 million. We're currently creeping up on $8 million for the year to date. And we haven't had the benefit of this larger harvest, which will happen in mid-September to October. The other differentiator for us is that we're a leader in cannabinoids. The most popular cannabinoids in therapeutic space or side of cannabis, as everyone knows and loves, CBD, which we're obviously growing 2 million pounds of that this year, but we're also focused on a novel cannabinoid called CBG, which is cannabigerol, which has a whole bunch of different benefits to wellness than D does, and can actually complement it quite well. It's an anti-inflammatory, antimicrobial, antibacterial cannabinoid. It also treats symptoms like eczema, psoriasis, Crohn's, lymphoma. They do potential. There's also potential for migraines and the anti-inflammatory product, long-term pain relief, and like sports recovery. So we're very bullish about this cannabinoid. We're super excited about it. We're going to be the largest producer of CBG in the U.S. and, like, quite frankly, the world. We will be about 43% of the CBG supply for next year. Yeah, absolutely. So Mike's going to talk about, Michael's going to cover the difference in the cannabinoid pricing and revenue standpoint.
Yeah, hi. So the CBD currently marketed for the biomass is running at about $250 a pound. This year we sold our biomass at $56 a pound of CBD biomass sold to a company out of Colorado called Mile High Labs. They've also given us a PO for an additional 250,000 pounds of our CBD biomass for next season. Which the season is now. We planted 4.5 million plants in the last 2 weeks. We're assuming that 80% of those plants get into the field, and so 4 million plants turn into they go full term, and then we harvest, and we've calculated that we should recover 75% of that. So that's how we get to 3 million pounds of biomass. The CBG, when you convert it from biomass into a distillate or an isolate, it sells for $20,000 a kilogram. Currently, CBG distillate isolate selling for approximately $4,000, all U.S. dollars.
And now, the advantage of the G, obviously, is it costs just as much to grow a pound of D as it does G. So, which is around $4.79 per pound. Pounds converting down into oil, it gets closer to about $25 to $30 each. But at the end of the day, you'll see in our performance and projections, our margins are sitting at really healthy levels in the north of 80%, and it's because of this price that CBG is giving us in the marketplace. It also isolates us or insulates us from compression in the market. You'll see the prices for CBD based concentrates going down, and coming in with G will just keep us at the healthier, higher levels, and then we'll continue to do this each year. So it's going to each season we'll have an additional cannabinoid that will be first to market. We'll be one of the exclusive providers of it, and this is based on the relationship that we have with our genetics company. We're entitled to 20% of their seed stock every single year, and they can't sell more to anyone else than they sell to us. And then this year we get fortunate where we sent them a $2 million purchase order with cash, and when they were only able to produce 2.6 million seeds instead of their forecast 5 million, we ended up with 43% of the seed stock and the largest share of CBG genetics in the U.S. How we get all of this to the barn, as they say, so we follow all of the hemp guidelines from the U.S. Hemp Authority. We only contract with farmers who have GAP certifications, good agricultural practices, and then we've also implemented our own standard operating procedures and growing techniques that we've learned from past years of successfully harvesting and growing hemp. So again, there's a lot of players in the market who really have the opportunity to truly understand the complexities of growing this crop. We know them very well. Our farm operations know them well, and then our contract farmers have also had at least no less than 1, in some cases 3 years of experience growing hemp in Kentucky and Colorado as well.
I just wanted to also turn up the price compression. We're using a very mechanized farming technique. We've got 7 combines in the field. We also have 5 dryers. They're hop dryers. They come from Austria. They can dry 5,000 pounds an hour of biomass. I think drying and curing is the most difficult part of harvesting hemp.
Yeah, it's a good point that Michael brings up. Infrastructure is critically important to successful, growing and harvesting and delivering dried biomass that falls within all of the compliance requirements of the U.S. Hemp Authority. Another reason why we went with our Kentucky farmers and their GAP certifications are a result of their farming relationships with R.J. Reynolds and the large tobacco companies over the last 20 years. In order to go to their standards, they had to have the certifications. Tobacco, you may have already learned, very similar to hemp from an infrastructure standpoint. Both the crops require drying barns, both crops require hand harvesting in certain aspects of the plant. Both crops require specialized combines. So, we found that, taking Kentucky tobacco farmers and then converting them into hemp farmers, we didn't have to go to the capital expense of having to set up, massive amounts of drying facilities in the state. They all come with their own facilities. We just completely had to distribute from.
Yeah, so I take us to the next slide, the multi-state presence. So that's a buzzword that you hear a lot, especially in the cannabis culture. MSO, so we are a multi-state operator. We're also going to become vertically integrated with this acquisition of Kirkland Group, a nutraceutical firm that's been in business for 30 years. They're going to do $6 million in revenue this year, so that'll be added to our 19 or so million revenue from the 2018 harvest. So Central Point, Oregon, Colorado, and Ellington, Kentucky are where we're operating now. We plan to be operating in California for the 2020 season. Again, we have the 40,000 square foot facility in Oregon. You can see in that picture. We hung dried all of the hemp there last year. This year we're building 4 hay stacks. We've got drying floors. We've got the triple barrel dryers. So going from 50 acres to 500 acres is a pretty big jump. We raised $23 million through a convertible debenture led by Canaccord Genuity, and we put about 70% of that capital to work. We spent $5.5 million on seeds. We spent $3 million on dryers and combine. We'll continue to build out the acquisition of Kirkman, and then continue to build out our processing facilities. It's an important moment. I'll take a moment to mention something that's very unique about our company that differentiates us again from other hemp companies and deals you're probably going to see. We'll use Charlotte's Web as an example. Charlotte's Web's entire company from the ground up all the way through is very much specifically designed to stay in one lane with one type of product, with one application. They built all of their facilities to that end. And so at the end of the day, should the market ever shift or change, or consumer preference change, or FDA regulations come into effect, it's going to be very difficult for companies that are set up that way to pivot and stay without being a major disruption to the operations, revenues, and everything else. Taking the experience that our management team has had in the marijuana space, we've built the company and its infrastructure on the idea that we should always be able to pivot to whatever the new market opportunities are. So that's exactly what's been our focus. The Kirkland acquisition being one. I'll give you an example. Kirkland comes with a TGMP accredited facility, so anything that we make there, we can export to Europe if the European market turns to be more profitable and better revenue for us than what's happening in the United States. It also comes with an FDA pharmaceutical manufacturing license. So if the FDA passes a ruling that certain dosage amount levels can only be prescribed versus sold over the shelf, we'll be one of the few factories in the country that can actually either produce our own products to that standard or also white label them for others as well. And then in our processing facilities, we do crude, isolate, distillate. We can go into pre-rolls. So we built our infrastructure that will allow us to drive biomass or our raw materials into any particular sales channel based on where the opportunities in the market exist.
Hey, Michael.
We're one of the companies that do that.
Hey guys, so we've got 5 minutes left here for some questions, so we can get to those. We've got one coming in here asking about what is the public company landscape like for pure play hemp companies? Are there any listed in the US, in Canada? What are your public competitors out there?
No, well, Canaccord considers Charlotte's Web our only competitor. There's a few other companies that are just strictly in the extraction business. MaryMed Labs symbol LAPF. They IPO'd at $1, 6 months ago, and the stock's $5-6 now. But no, there's not any real competitors other than Charlotte Gap, which is of course a much bigger company than we are, but very successful IPO. We plan to IPO our company in Q4 of 2019, and currently the target is NASDAQ. We've been in discussions with both Canaccord and Jefferies to lead a NASDAQ IPO, and that's currently our plan.
And talk to us about, so CBG looks like it's selling for 5 times what CBD is. The New York Times recently had a CBD edible bear on the cover of their magazine. Do you think if CBD is the story of 2018, it'll be CBG and these other cannabinoids that'll be talked about in, say, 2020?
Yeah, absolutely. I mean, it's already being discussed on the formulation side of the industry. Everybody that is working with cannabinoids daily to come up with new products has been talking about G for a while. So it's a very hot topic on our side of the business. And then as it will, products with G will start to hit store shelves, in the first quarter of next year. Then the consumer will begin to understand it, and it will get the press coverage it deserves. G will almost certainly be the cannabinoid of preference for the skincare industry. The anti-inflammatory and antimicrobial properties of G make it a much more effective ingredient as a cannabinoid used into like topicals and creams and lotions than D actually does. So, it's like anything, it's just these new features or these new cannabinoids, as they come in, people are going to have a better understanding. We'll have an understanding of them. They'll know their applications. They'll be put into brands that market them for specific uses. And then, I think the consumer will begin to understand and appreciate that it's not cannabinoids overall. It won't just simply be focused on CBD.
We will be able to blend our CBD with the CBD as well to come up with certain blends that are cost effective,
which is really exciting. I mean, we're exponentially increasing the number of targets and applications that are in the market right now. And then in the following season, we do CBD food, and you've got 3 different cannabinoids, and you can create 3 different formulations and ratios and concentrations, and the products and opportunities just begin to explode from there. Think of it as a 1986 cell phone that could only...
Right. Oh, we lost you there for a second. Just going back to the brand side of things, do you envision partnering with other companies to create these brands, or are you building out an in-house team? How is that going to look like?
Yeah, both actually. I mean, we have in-house brands that we've developed. We also have purchased Kirkman. Kirkman has 400 SKUs that we can start, including CBD formulations into. I think that will be a big factor in driving their sales and getting us a very great return on that investment. But then we also look to, do quite a few acquisitions. It's going to be, our story is probably better than most of the stories in the marketplace. You get first or second quarter of next year, and I think we're going to have the leverage and the paper to go out and start making some pretty good strategic acquisitions and buy our way into the current base.
Yeah, Life Sciences out of Colorado was one of the companies that we've had several discussions with partnership, merger, something. So yes, we will partner with other companies, but it isn't our intent at the end of the day to own our own brands, to do our own processing, to be vertically integrated and multi-state operators. So eventually, a year from now, we won't need partners. It'll be the big brands that'll be our partners. And we believe we need to get the cost of this stuff down. Right now, even at $4,000 a kilogram for CBD, it's still too expensive for Arizona Iced Tea or Red Bull to put into their product. So we feel we need to get that cost so that we can sell the product down to $2,500 a kilogram, and then we'll see some of these big brands come out of the woodwork and be signing big POs for our products. We really see ourselves as a B2B business.
Yeah. And then, the opportunity to do white label. We had the chance to go. I was with King's Garden, which is a vertically integrated marijuana company here in Southern California. And we always, in that company, before we focused on our own brand, we focused on the B2B. And the coolest part about that was, when we did do it with our retail brand, and it went into 85% of the shops here in California, you would be standing in a marijuana dispensary, and you would see 6 different cannabis brands behind the counter. And we'd be in 5 of them. We would be in King, but then we'd also be in all the others. So, we've come up with a marketing mechanism, a marketing plan to be that B2B player to the other, cannabinoid products as well. So that the idea being is when you're in Walgreens or CVS or any other major retail store and you see our branded line, Well, our products are also in all the others. So we'll always make sure that we're growing beyond our own retail capacity.
All right. Well, thanks so much, guys, for joining us. HemptownUSA.com. I encourage everybody to go check out the video that they have on there. It will really explain a lot in about a 2-minute session about how this company is really going to be a leader in the hemp space. And you heard it here first. CBG is the future. So thank you so much. We're going to take a quick break, and we'll be right back with an esports company. All right, last but definitely not least, we have the CMO of New Wave Esports. This is Grit Capital's latest esports client. They are private right now with plans to go public very soon, and we are joined by Dan Mitri, the CMO. So welcome, Dan. Love to hear the presentation, and then we'll go through some Q&A after.
Great. Hey, everyone. Like Jen said, I'm the CMO of New Wave Esports. I'm very excited to be here. I thank you again, Jen, for hosting a great virtual conference, and thank you, everyone, for joining us today. I'm going to walk you a little bit through New Wave Esports, what the esports industry currently is, and how we're contributing to it, and how you can potentially get involved. So New Wave Esports, we're here to inspire the future of esports through innovation and purpose. We're an acquisition, investment, and technology development company with the goal of elevating the entire industry of esports and competitive gaming. Our mission is currently to become one of the first publicly traded esports investment companies in the world. We play a pivotal role in enhancing all aspects of the industry for existing fans, players, and associated organizations. And we aim to open the doors of opportunity for future growth in esports and competitive gaming. We do that through acquisition and investment in exciting projects and assisting growing companies in scaling up their businesses and revenue streams. And we also create shareholder value by assisting our portfolio companies in increasing those revenues and creating liquidity for our investors through IPO, RTO, and or acquisitions. Let's take a look at esports just so we're all on the same page, where it started and where it is now. Esports technically started 40 years ago in 1972 with a game called Space War. Stanford University held the first esports competition. Fast forward that to 1997, we have first widely regarded esports tournament, which drew 2,000 players in a first-person shooter game called Quake, in a tournament called the Red Dead Annihilation. Now, fast forward that to 2017, where you have Epic Games that offered up a $100 million prize pool for their 17-18 Fortnite season, which completely elevated the industry and told a lot of people that, hey, esports is here and it's here to stay. And by 2021, we expect the esports industry to grow to about a $1.65 billion revenue machine with more than 557 million viewers globally. So it is very much growing. Here in the US, currently we have 84 million esports viewers. That's more than MLB's 79 million and more than NBA's 63 million. So there are a lot of people watching esports. There's a big appetite for it. And we see non-endemic brands also getting involved in the industry. You have Nike that embraced esports with a League of Legends sponsorship deal, and you have Adidas that signed a 2-year deal with Grow Up Esports. Now, let's take a look at New Wave Esports focus and how we're contributing to the industry. We do that through, as I mentioned, acquisitions, investments, and developments. We have a shared passion for and belief that the world of esports is just barely tapped in that opportunity. It's brought New Wave Esports together. And we're developing tools and solutions to meet the growing needs of the industry. And we also provide those advisory services to our portfolio companies. Now, when we look at our investment focus, we have 4 pillars in which we really hone in on. The first is teams, leagues, and organizations. These are the boots on the ground individuals and companies that really bring esports to life. The second is events, activations, and experientials. This is where the mass audiences get involved in esports. The third is platforms, networks, and tools. This is how players connect with teams, teams with brands, brands with games and other opportunities. And our last is emerging esports technologies. So as the need for new technologies grow within esports, we want to provide those solutions. Let's take a look at our current portfolio within the New Wave Esports sector. We have the Thunderbolt CDG, which is a full acquisition. We acquired them. They're a software applications and technology development company that has provided services for 40-plus startup companies. They're very proficient in that technology development. It expands New Wave Esports offerings and capabilities as they innovate and grow the esports industry. And a little bit on what they develop is the platforms, tools, and new experiences. So we're in some conceptual phases now, and we look to continue the development through this year and really start to come out of the gate next year. But where they also provide significant value is their advisory services. So they are our advisory service arm for our portfolio, allow us to build in additional stock options as we invest and acquire other companies, and really build up some of those little trinkets that go with some of those investments. Moving on, we have an investment in Even Matchup Gaming, where we obtained a significant equity stake in the Toronto-based leading esports and competitive gaming event organizer, broadcaster, and player management company that facilitates online and live tournaments. Their tournament operator model is integral to the esports industry ecosystem as it's scalable and rapidly growing. And they focus on fighting games. So that's a niche audience that uniquely positions the company in this important emerging sector of esports. They produce 80 events per year with 500 events posted on a local, regional, and national levels, including Canada's largest fighting game tournament, Get On My Level, and Tri-State's largest Super Smash Brothers tournament, Let's Make Moves. We just wrapped up the Get On My Level 2019 event, which was an industry success. We saw 2,100 fans come out and compete in Super Smash Brothers Ultimate and Melee. We saw 1 million unique viewers on our Twitch live stream programming. So we're really excited in that growth and very excited in that investment that we placed. The second investment we placed is a company called Tidal Gaming. And we aim to support their growth in esports, entertainment, and related ecosystem, and we also secured 2 advisory roles with them. Now, Tidal Gaming's footprint in esports has allowed them to establish a brand that resonates with a growing audience of esports enthusiasts and opens new revenue opportunities as they expand globally. Tidal Gaming owns and operates one of Canada's premier esports teams, Lazarus, which is comprised of 50-plus professional players, 12 professional teams across 10 countries. So they are quite expansive. And they also lead one of the world's first all-women's esports teams, which is a personal passion of mine. I love to see our industry growing in leaps and bounds in new ways. They compete in 12 games, including Fortnite, PUBG, Counter-Strike, Global Offensive, Madden, NHL, and many, many more. And to date, they have 60-plus podium finishes and 32-plus tournament wins, so they are on the rise. Our final investment has been in a company called Playline. And again, there we're looking to support their business growth, their audience expansion, the platform optimization, and the objective of making fantasy sports accessible to traditional sports and esports fans. They have a platform on the web, mobile, iOS, and Android, that's very intuitive for new and existing fantasy sports players. And their ability to connect large audiences to the growing sector of fantasy esports establishes them as an industry leader. The company is co-founded by UFC middleweight champion Michael Bisping and has secured NBA All-Star Roy Hibbert as their investor and strategic partnerships manager. So they have a star-studded cast behind them with a great celebrity network to market through. The platform allows users to predict the stat line of a group of featured superstar players in that day's specific games for a chance to win multiple 1 million prizes daily and up to 1 billion in prizes throughout the year. So there's a lot of opportunity for not only fans and users, but also for us. They're partnered with Twitch, Speedway Motorsports, One Toronto Gaming, and many more collaborations coming from the pike. And they currently have 376,000 registered users with a growth trajectory of 1.69 million users by 2021. Very awesome platform. They're live now, so if you haven't checked them out, check out playline.com. Now, I'm very excited to announce that New Wave Esports is closing the RTO with True Claim Exploration. This is our big step in the road to becoming one of the first publicly traded esports investment companies. We're currently applying to list on the CSE, and we hope to complete that in before September 30th this year. Looking briefly at our capitalization structure, we have 48.8 million shares outstanding, 36.5 shares purchase warrants outstanding with 0 stock options. But once we close our RTO, the True Claim shell will bring us to 84.7 shares out, 71.4 million warrants out, with 100,000 stock options potentially out. And briefly looking at our team that really brings New Wave to life. Our executive team is comprised of Trimble Fisher. He's our president and managing partner. He holds a BA in law and is qualified with over 15 years of capital markets experience. He's contributed to some of the largest financial institutions in Canada by raising $3 billion plus in capital, and also co-founded financial companies and investment funds. And in previous positions, he was a co-founder, COO, and head of trading for a hedge fund. Myself, CMO and managing partner, I have 17 plus years in video game marketing, developer and player communications, and building large-scale communities for AAA franchises, including working at companies like Electronic Arts, Sega of America, THQ, down to Sierra Online. I also hold the advisory position in Tidal Gaming, and I'm also co-founder of Thunderbolt CDG. And lastly, but not least, Tiffany Lee is our CFO and corporate secretary. She has the BBA honors from Wilfrid Laurier University and currently holds a position as controller at High Hampton Holdings. She's a rock star in the finance world as well. And as we look at our advisory team, which I'm very excited to announce, we have Neil Duffy as our advisor. He's a COO of World Gaming with a great experience in esports and a very networked position within the industry. He's also director of Tidal Gaming. We have Joel Frudman out of Canada. He's a director of numerous private and public microcap companies. And we have John Dudney, who is currently a director of DC Acquisition Corp. And lastly, Peter Cunningham, who has advised over a dozen go public transactions within his career. And GTech, Chiron, who was on our conference today, High Hampton Holdings, Beware, among many others. And lastly, we have our board of directors, who is comprised of Tiffany Lee, as well as two esteemed colleagues, Jeffrey Stevens and Stephen Lowe. Jeffrey has 18 years of professional experience in Canadian capital markets, and Steve Lowe, for the past 10 years, has been on Bay Street working institution sales and trading. So as you see there, New Wave is very much comprised of very capable financial, esports, and gaming veterans. And again, our goal is to inspire the growth of esports through our innovation, through our purpose, via acquisitions, investments, and technology development. So I'm excited to see esports grow, and I'm looking forward to seeing that industry grow through a lot of our contributions, and I hope you are too.
Fantastic. Thanks, Dan. So we've got time for 5 minutes of questions here. One of the best performing ETFs of 2019 has actually been an esports ETF. And I think that probably speaks to the fact that not only is the industry growing, but money is flowing into the space, institutional money maybe starting to flow into the space. So when we hear about New Wave and the business model, should investors think about it in terms of an ETF for private esports companies? Is that one way to look at it, or is that just what it looks like now and it's going to transform into something else down the road?
It's what it looks like now. So we started out as an investment issuer, and we wanted to differentiate the company, build more significant value, but not just being a holdings company, but being more of an acquisition-based company. So we want to take some of those great deals and those opportunities off the street and continue to build those companies through our experience, contributing to their revenue streams, getting additional stock options, and building a portfolio that synergizes between all the companies. So again, it's less of like an ETF, where an ETF may be a bit limited because they only hold, say, sub 5% in a company. We look to fully acquire companies and fold those within our portfolio.
And over the last, I would say, 12 months now, we've tried to educate, Grit Capital and our team has tried to educate investors about the esports opportunity. And I think everybody understands the size and the scale. But what they continuously have problems around, and I would love to find out what your team, how they discuss this, is the revenue and the profitability models of these companies. So are you guys comfortable investing in companies that are not profitable yet and may not have revenue models figured out yet, but because of your expertise in the industry, understand the value creation like beyond that? How are those discussions happening at the management level?
So two things. There has been an overinflation of valuations within companies. There's also an overanalyzation of current audience size. I think a lot of that's going to correct itself as we get better tools. We understand where the money's going and how that money is going to get deployed. But when you look at companies, we are certainly looking at companies that are in the incubation stages. They may need money to grow and scale, or money to bring their operations to that next level. They may be operating in the negative, and that's fine. They may be in a growth phase. So we don't necessarily rule out anybody who's working in that negative. We want to contribute to their success. But where we look at companies and some of the criteria is through their ethics. Are they professional? Are they innovating esports in a way that we see that's going to be significantly impactful to the industry? And then we work with those companies to build out their revenue models. We continue to open up new opportunities through our network to make sure that they have great opportunities to grow. So we look at a wide swath of different companies, from incubation to fully established, and we place those investments where we see that esports is being innovated through their teams and through the products.
How are you finding like the educational level in esports in California versus Canada? Like, how far behind are we here in Canada in terms of our knowledge base?
I would actually say you guys are pretty much in parity. So coming out of Canada, that's where a lot of the big financial money is being moved. Down here in the States, you have a very big focus on game development. And both of those work synchronously together. With great games that come around, the esports industry latches onto those. You can't necessarily make a game that is esports focused. You have to have a community behind it to adopt that and turn it into a competitive experience. So the Canadian audiences within finance, within esports, is still very much learning about esports just as much as we are here in California, here in the US. So the esports industry within North America is still growing. It's growing in completely different ways. And we have to be attuned to where those growth sectors are and jump on those, where those opportunities are. It's my job to educate a lot of people who are following New Wave Esports, but also be a leader in esports and showing what that growth rate is, where the growth opportunity is, whether it's within teams, like we see with Will Smith putting $41.6 million into a team, or Drake putting in a sizable chunk into 100 Thieves. There's a lot of great opportunity, a lot of great growth, but as long as we're accurate in our numbers and accurate in our valuations, then we can help companies grow.
In a way, these celebrities, whether it's Drake or The Weeknd, who are investing in these teams, they're kind of equivalent to billionaires who invest in professional sports teams, if you will, because I think esports a bit like cooler, more millennial, and that kind of thing. So there was some worry that there wouldn't be kind of buyers for these teams or investors for these teams because they're getting kind of expensive. But it looks like we do have some buyers at the table for those. Would New Wave ever look to get in the team buying game, or is that now the cost has gotten too expensive or away from you, or is just not in the mentality of how you look at the space?
No, absolutely. That's one of our future objectives as we look at esports growing. Teams is certainly one of those revenue streams at a very top level. And currently, teams are collecting big checks, obviously, to expand their operations, to build franchises, to either latch their very proficient athletes onto closed franchises, such as the Overwatch League, the Call of Duty World League, or start up their own tournaments and leagues for collegiate scenes and grassroots communities. So we're very much looking into that opportunity, whether it's starting up our own team or investing in another team. We've already placed an investment into Tidal Gaming, which owns and operates Team Lazarus, and we've seen some great success there. That team is very proficient in the games they play. They push great diversity and inclusivity within gaming, which is something that we need as an industry as a whole, and it's led by star-studded cast as well. So teams are here to stay. Teams are certainly something that you shouldn't look past because they are contributing to the other pillars that I previously mentioned: platforms, events, and technologies and tools. They all work together and they all need each other.
So one company that gets brought up a lot in these esports conversations is Live Nation. So Live Nation's Ticketmaster and owns a whole bunch of millennial events and concerts and series and all that kind of thing. Do you think that's a company that would make an acquisition in the esports space just because they are really event driven?
I think so. I think it would be wise for them to look at esports as an emerging entertainment opportunity and not just a fleeting moment. Look at the numbers here. You know, we see audiences watching esports in the U.S. 84 million people watching, 557 million projected by 2021. As a businessman, I would want to invest and explore that opportunity. So I think Live Nation would be very smart in investing in that certain lane, especially with their network and with venues, with current entertainment properties, and then obviously with that investment, New Wave's going to benefit from that. That's going to be an increased network, increased opportunity at a global level.
Yeah, and I think what an underlying theme that's going on here that's helping the whole industry is just a shift from people watching TV to being online. So last year was the first year where spending on advertising was shifted from TV to online. In terms of percentages, went 51% online. So I think something that's underlying the big sponsorship spending, the commercial spending, the Fortune 500 companies, it just happens to be esports that this audience is large, but it could be anything else. But I think those advertisers and those companies are just trying to reach those eyeballs. So because they're online playing games and they're on there, that's just a way to reach. So, you know, it could have been another industry, but it just happened to be esports. And I think that you look at it through that lens, it helps people get a lot of comfort around the spending will continue because gamers will continue to be there and the eyeballs will continue to be there. So with that, yeah. I was just going to say, with that, we've got.
Oh, no, I was going to say, you have a very good point because you know, a lot of people may say, "Oh, esports came out of the blue and overnight." That's not true at all. You know, esports started in Asia and it was very big on television. That was before the emergence of live streaming platforms and the expansion of a lot of our network through internet, through upcoming 5G mobile networks. So I would say it has been a very complex amalgam of technologies. And as esports grows and technologies within video games grow, you're going to see new technologies that allow players to connect with teams to connect with their, obviously with their audiences. And I'm looking forward to seeing where technology progresses because esports is only going to get healthier and grow more as technology becomes more prominent in households and allows people to connect at an easier and more at a better rate.
It's so true. All right, Dan, thank you so much for joining us. And we are going to wrap this up now. And if anybody wants to find out about New Wave, I encourage you to go on the website and check out their great Instagram account as well.